Hi students, 12th Standard Accountancy, Chapter-5, Admission of Partner, Illustration-20. Let's read the question first. Vasu and Devi are partners sharing profit and losses in the ratio of 3:2. They admit Nila into partnership for 1/4 share of profit. Nila pays cash ₹3,000 towards her share of goodwill. The new profit sharing ratio is 3:3:2. The pause necessary journal entry on the assumption that the fixed capital system is followed. First, we have to understand what they given in the question. Okay, so Vasu and Devi both are old partners. Their old profit sharing ratio is 3:2. 3:2 means Vasu's old profit sharing ratio 3/5 and Nila and Devi's old profit sharing ratio is 2/5. And they admit Nila into the partnership for 1/4 share of profit. And Nila brings capital 3,000 rupees. Nila brings cash towards goodwill for 3,000 rupees. In addition to that, they have given new profit sharing ratio that is 3:3:2. Okay. What they asked us to do, pause the necessary journal entry for goodwill. Okay. How can you pause the journal entry? We need to know what is the sacrificing ratio. Okay. If they didn't given the sacrificing ratio of, they didn't mention the sacrificing ratio in the question to pass the journal entry for the goodwill, we can assume that old profit sharing ratio as the sacrificing ratio. But in this question, this is the different situation. Illustration 20, they have given old profit sharing ratio and a new profit sharing ratio. How can you find out the sacrificing ratio? If they given old profit sharing ratio and new profit sharing ratio in the question, you can't consider old profit sharing ratio as the sacrificing ratio. Then how will you find out the sacrificing ratio? It's very simple. You have to subtract old share minus new share. You will get the sacrificing ratio. Okay. So first we have to find out the sacrificing ratio. Then you will pass the journal entry for the goodwill. Okay. So to find out the sacrificing ratio, what is the format? Old share minus new share. Vasu's old share is what? 3/5. And Vasu's new share is, this is for Vasu and this is for Devi. And with this one 2/8 for Neela, new partner. Neela's new profit sharing ratio. Okay. So Vasu's new profit sharing ratio is 3/8. And Devi's new profit sharing ratio is 3/8. Okay. So what we have to do? We are going to subtract old share minus new share. Old share from new share. You will get what? Sacrificing ratio. So for that you are going to check the denominator. Denominator has the different number. 5 is not divisible by 8 and 8 is also not divisible by 5. Both number not divisible by each other. So what we have to do? We are going to multiply 5 by 8. Okay. So 5 8s are what? 40. Then we are going to cross multiply with the numerator and the denominator. Okay. So 8 3s are 24 minus 5 3s are 15. 24 minus 15, 9/40. For Vasu's new profit sharing ratio is 9/40. Now we find out Devi's new profit sharing ratio. So 5/8, what we have to do? We are going to multiply the directly 5 8s are 40, and next we have to cross multiply the numerator with the denominator. 2 8s are 16 minus 5 3s are 15. 16 minus 15 equal to 1/40. Okay. So what is the sacrificing ratio for Vasu and Devi? 9/40 is to 1/40. So sacrificing ratio is 9/40 is to 1/40. So we need to give in ratio form. So we need not consider about the denominator value. So the ratio, sacrificing ratio is 9/1. Got it? Then we have to pause the journal entry for the goodwill. Who is the new partner? Nila is the new partner. She brings the capital, she brings the goodwill amount to 3,000 rupees. So goodwill comes into the business, cash comes into the business. If the cash comes into the business, what is the journal entry? Cash is the receiver. So debit the receiver. So bank account debtor. You can write bank account debtor or cash account debtor. 3,000 rupees entered. what is the what account is to be credited? Bank account is to be debited. Old partners current account is to be credited. Okay. So who are the old partners? Vasu and Devi. So we are going to distribute that 3,000 rupees to the old partners current account. How can you distribute? In their sacrificing ratio. So for that you are going to enter 3,000 into sacrificing ratio is 9 by 1, right? So 9 for Vasu and 1 for what? Devi. Okay. So 9 plus 1 equal to 10. So 3,000 into 9 by 10 means 110 is 10. 3 tens are 30. Here 20 is to be added here. 3 nines are 27. 20 is to be added here. So Vasu's profit, Vasu's goodwill share is 2,700 rupees and Devi's current account is the same goodwill. We are going to distribute to the Devi to her sacrificing ratio. Okay. So her sacrificing ratio is 1 by 10. Now we have to cancel it. 110 is 10, 3 tens are 30, 20 is to be added here. 300 into 1, 300. Okay. So Devi's goodwill for her sacrificing ratio is 300 rupees. Okay. So listen here carefully. We are past the journal entries. Bank or cash account at 3,000 rupees to old partners current account. Who are the old partners? Vasu and Devi. Listen the question carefully. Pause journal entry on assumption that the fixed capital system. If they given underline the word fixed capital system, you are going to write Vasu's current account, Devi's current account. Okay. If they given in the question current capital account, fluctuating capital account, what you do? If they given in the question, you are going to pass the journal entry in fluctuating capital system. You have to write old partners capital account. Got it? If they given in the question fixed capital account, you have to pass the journal entry for old partners current account. If they given fluctuation, if they given fixed, you have to write capital account here, old partners capital account here. Okay. Thank you. Take care.